What happens when the world's largest economy slaps a tariff on every single import? No exceptions? The answer is unfolding in real time. Global markets are shaking, world leaders are scrambling, and we may be heading toward a full-blown trade war. President Trump's sweeping 10% tariff on all foreign goods has just gone into effect, and the fallout is already staggering. In the past hour, President Trump's blanket 10% import tax became official policy. Every nation, every product, no exclusions. And the global economy is feeling the shockwaves. Markets have been rocked. US and UK stock markets just closed out their worst week since the COVID crash. On Wall Street, traders watched helplessly as trillions of dollars vanished from global share prices in just a few days. China, targeted most aggressively in Trump's tariff blitz, wasted no time retaliating. Beijing hit back with a punishing 34% tax on American goods, an act of economic defiance that triggered yet another day of sell-offs. The trade war is no longer just looming, it has started. On his Truth Social platform, President Trump remained unshaken. China played it wrong, he posted defiantly, accusing Beijing of panicking. In a bold, all-caps message to investors, he wrote, "This is a great time to get rich, richer than ever before." But not everyone is buying that optimism. Federal Reserve Chair Jerome Powell struck a more somber tone. While uncertainty remains elevated, he said, it's becoming clear these tariffs are larger and potentially more damaging than anyone anticipated. The Fed is now warning of higher inflation and slower growth. Some analysts say a global recession is back on the table. And this is just the beginning. Those 10% tariffs are live, but higher targeted levies are coming next week. Some countries will be hit harder than others. Already, economists are predicting supply chain disruptions, higher consumer prices, and deep structural shocks in export-dependent sectors. Yet if the chaos is bothering President Trump, he's hiding it well. He spent the day at his Florida golf course, far from the trading floor, but not from the headlines. His posture? Unyielding. He's calling this Liberation Day for American industry, insisting it will make America wealthy again. Meanwhile, America's trade partners are weighing their next moves. In London, Prime Minister Keir Starmer is urgently calling Western leaders. Downing Street says the UK wants to avoid what it calls an all-out trade war. But behind the scenes, the British government is preparing a response. Sources inside Whitehall suggest some flexibility may be coming, particularly around car manufacturing regulations. With UK-built electric vehicles now facing US import taxes of up to 25%, Starmer is expected to ease domestic production targets to help companies survive. Planning reforms are also on the table as Britain looks to stimulate growth at home. Retaliation remains a possibility, but it's not Plan A. The preferred option is a negotiated trade deal with Washington. But the question is, what concessions will the UK be willing to make to get there? In Beijing, the gloves are off. After weeks of speculation, Chinese President Xi Jinping made his move. A blanket 34% tariff on all U.S. goods will take effect April 10th. That's in addition to earlier levies, and it's hitting U.S. industries where it hurts. American agriculture, already bruised by earlier trade tensions, is now facing the prospect of being shut out of the world's second-largest economy. U.S. tech and durable goods? Also under threat, Beijing's counterpunch is calculated and personal. These tariffs strike at Trump's political base, rural states, and manufacturing regions he counts on. And unlike previous measured responses, this time China isn't holding back. Trade analysts believe this is the clearest sign yet that Beijing sees no room for compromise, at least not under current terms. The real danger? Contagion. With two superpowers locking economic horns, the risk of a broader global trade war is growing. Economists are warning of ripple effects that could damage not just China and the US, but Europe, Canada, and emerging markets alike. Entire supply chains could be rerouted or severed. There's even talk that China may now actively seek to build trading blocs that exclude the US, strengthening ties with Europe, Canada, and others to build an alternative economic alliance. If that happens, American companies could find themselves increasingly isolated. Kelvin Lamb, a macroeconomist with Pantheon Macroeconomics, painted a bleak picture of the future. We're expecting China's GDP to fall by 2.5 percentage points over the next 3 years, he said. Manufacturing investment will likely stall. There's too much uncertainty now. Lam warned that medium-tech goods and durable exports are especially vulnerable. He also predicted that China will accelerate its pivot toward domestic consumption, trying to wean itself off of American demand entirely. But Lam also had a warning for the United States. This is mutual harm, he said. Trump's tariffs might slow U.S. growth enough to weaken America's bargaining position when negotiations finally come. China knows this, and they're playing the long game. He also noted that China's retaliation is escalating, not just in tariffs, but in tech, rare earth minerals, and regulatory probes on U.S. firms operating in Asia. In other words, this trade war is bigger than just prices and policies. It's about leverage, power, and positioning for a new global order. As it stands, both sides are locked in a dangerous standoff. No clear off-ramp in sight. And while President Trump is betting on a stronger, more self-reliant America, the costs of that vision may start hitting everyday Americans. Fast. Inflation, job losses in key industries, higher costs at the store, it's all coming. And the rest of the world, watching, waiting, preparing for impact. This is Focal Point. Stay with us as we track every move in this escalating global showdown and what it means for your wallet, your job, and the future of the world economy.